Hello, everyone. We're going to be solving problem 6 from chapter 6, problem 35 of the Honduran's Cost Accounting book. This is our 17th edition. All right, so here are the solutions. Okay. First of all, let's read through the problem since I'm making a few changes to it. This problem is presenting information for you to solve the operating budget. First, we have the inputs required to make the unit of output. So remember, it's very important for you to know what is the output and what is the input. Step number 1, identify the output, identify the input. The output is what you're making and selling. And in this case, it's blankets. And in order to make the blankets, we need the inputs. What inputs? Well, remember the manufacturing cost, materials, labor, and overhead. So for materials, the input is yards of fabric and patches. We have a logo patch. So we have 2 types of materials that we're going to be looking into. And then we have labor, which the driver over here, the input is labor hours. And then for overhead, we need to scroll down a little bit more and figure out what the overhead is. Okay. So manufacturing overhead is driven by, so using here says is allocated to each blanket on the basis of labor hours. So the input will be the same as labor, okay, because they're both driven by labor hours. More labor hours you work, then more cost you're gonna incur, okay, both of those. Okay, so another notation I want to make is that, as I said in class, we are crossing off February. Why? We don't want FIFO. We're going to keep the prices constant. Whatever you paid last month will be the same you're paying this month for simplicity's sake. So we're crossing off the February information. And we're also crossing off the beginning inventory because that will follow FIFO. And I crossed off this line right here that tells you to use FIFO. We don't care about FIFO when we do in reality, yes, we do, but not in this problem. Okay. Then next, what do we have next? So here's the inputs that you're gonna need. Very important. Next, beginning and ending inventory of the inputs. Okay, in this case, the only input that will carry inventory is the material. So fabric and logo, beginning and ending. We're gonna need. Here's the prices. Okay, per unit of input. Okay, how much we're paying for the fabric per yard, how much we're paying for each logo, and how much we're paying our employees per labor hour. And then we have the inventory for the output. Okay, not for the input's the material for the blankets. How many blankets we started the month with, and how many blankets we're ending the month with. Remember that we're doing this for the month of March, so we're only preparing a budget for 1 month. Below, we have the selling information, how many units we want to sell, what is the selling price per unit. We're going to need this for our first budget, which is the revenue budget. Okay, so here you have all the budgets we're going to be making. And as you can see on the side, I already have the spreadsheet with the budgets and what we're going to be filling in. Okay, so operating budgets. We're going to start with the revenue budget. So we want to know what our revenue, misspelling here, what our revenue will be. We need how many units we're going to sell. We're going to multiply the units times whatever we're selling it for. So that will give us the total revenues. So let's go down here and figure out how much is it that we're trying to sell. So we go down to the selling section of the handout. You're going to see that we are budgeting to sell 140 units of the Broncos blankets and 195 units of the Rams. So let's put that here. Units. 140, 195. Now let's see how much we're charging for each. We're going to be charging $305 for the Broncos blanket and $378 for the Rams. So $305 and $378. Okay, so now that we have the units and the price per unit, let's compute the revenues. First budget, very simple budget. So, same for Rams, and now let's get the total. So our total revenues, total revenues. Okay, so next, we're gonna move down to the next budget, which is the production budget. So now we're producing two different types of blankets. So for that, we need two finished goods T accounts, so we can trace them individually. So let's start with the Bronco. So if we want to sell 140 units, that will be the units coming out of your shelf. Okay, so if it comes out, remember it's an inventory, it goes out this way, it comes in this way. So it's an asset, okay? Increases on the debit side, decreases on the credit side. In this case, we're in units. So I'm not going to put the dollar sign, I'm just going to put the number of units. 140, and we're selling 195 Rams blankets. Our key is to figure out how many we need to produce. We can't figure this out unless we have the beginning and the ending, because we have the basic equation here that tells us if we take the beginning, we add the production, this will be what we have available to sell. And then we sell some, that means the remaining balance is an ending. So you need the four variables to sell any of the to solve for any of these four. So in this case, our X is production. We're gonna solve for production. So beginning plus X equals 140 plus ending. Okay. So let's get the information. Let's go down to output. We're still in output. Blankets. There we go. We have for the Broncos, we have 14 beginning inventory and 24 at the end. So if we want 10 units more at the end than what we started with, logically, we will have to produce 10 units more than what we're going to sell. We're going to prove it. 14, 24. Let's do our equation. 140 plus the 24 minus the 14, 150. Again, it's 10 units more than we are going to be selling. Okay. If you can see the logic behind this, this is great. Otherwise, remember that the difference between your credit and your debit equals the difference between your ending and your beginning. Okay, so it's a $10 difference, $10, 10 units difference. You will also see a 10 unit difference here. Okay, now let's see for the Rams, what is the inventory? We have also a 10 unit difference from 19 to 29. 19, 29. So we have 195 plus 29 minus the 18. We need to make 205. So from now on, the cost budgets that we're going to make, the materials, the labor, and the overhead will be driven by the production, not the sales, not the sales. Okay. The units that we're going to be making, because that's what we're costing, what we're making. Okay. So these are your two key numbers. We're going to move down to the next budget. We're going to do materials. So materials will require two types of budgets. And you see that in the instructions down here. It tells you the usage budget and the purchases budget. Okay. And also we want to see it in units and in dollar amounts. Okay. So let's start with Broncos. I color coded. I have the Broncos in green and I have the Rams in blue. So let's start with Broncos. We can copy this information right here. Want to do that? Same without the color coding. Let's color code it here. Okay. So we are making 205. And now we want to know how many units of each input we're going to need. Okay, so for that, we need to figure out what the ratio is. And that's where we're going to go to our first chart right here, input per output. Make a Broncos blanket, you need 5 yards, 5 yards of fabric. Okay, so we have a conversion. For each blanket, 5 yards. So it's 5 yards to a blanket, and that's the 5 to 1 that I have right here. Okay, 5 yards to 1 blanket. So if I am going to make 205 blankets, now I'm going to need 25 times 5. That will give us the usage. And here's the basic formula for the materials. The beginning inventory plus the purchases minus the usage will equal the ending. Okay, so instead of production and sales, now this changes to see the difference. This is for output, this is for input. Okay, so we're going to be using 1,025 yards. Now let's figure out how many we have to purchase. Same logic as the ending inventory we just saw. And we're gonna get that information from here. We know that we have 40 yards in beginning and we wanna end up with 30, okay? This is the red wool. So 40 yards beginning. Okay, logically, if we think this logically, if you're gonna end up with 30 units less than what you started, okay, what is the logic here? It's the opposite, right? You can produce a little less and you're gonna be selling right here. So you have more, okay, 10 units more in the beginning. So you're free to produce, to buy, in this case, 10 units less, but let's see it. Okay, so 1,025 plus 30 minus 40. I probably messed up the formula. Let's change it here. Yeah. It's B plus. There we go. So yeah, we can buy 10 units less than what we're going to be using. Okay, so purchases, usage. Actually, no, I don't want this because I'm gonna have to show you the dollar amount. Okay, now this is in units. Okay, this is in units. Now let's convert this into dollars. We know that each yard cost us $11. So we do 11 yard. Notice how I'm putting dollar signs on the financial measures and I'm not putting a sign on the non-financial measures. Okay, so this is cost. 1,015 times 11, that will give us the total cost of purchases. And in this case, we have the 1,025 times 11, that will give us total cost of usage. Okay. And if you want to compute the ending, then you do 30 times 11, and that gives you the cost of ending inventory. Now let's do the same for the patches. Now we're being told that we need only one patch per blanket, one patch per blanket. Okay. So I have the ratios here, so you can see what I'm doing. But we only need one patch. We're only going to need 205 patches. And let's see how much we have at the beginning. It says that we have 50 patches and 30 patches at the end. 50 and 30. Let's figure out how many we have to buy. To buy 185. Now let's put the pricing to it. It's $8 a patch. $8 a patch. It's from the handout. So 185 times the 8. And the same thing for the usage. Same formula. Right. So we have the units, we have the cost. Let's do the same thing with the Rams blankets. Let's copy Rams. Oh, I just realized that I did all this work with the Rams. Okay, numbers. So it's the Broncos that I needed. I'm just gonna change it really quick, but the logic is the same, you guys. I'm just gonna erase this. So some copying and pasting. Clear. Copy and paste. There we go. So let's redecorate. Thank goodness for Excel, because it just fixed everything for me pretty quick. If this is a constant, this change, now we need 150 times 5 is 750. We're buying 740. Everything is being fixed. Oh, except this, I didn't fix this one. 150 here. Everything else is fixed. Okay. Quick fix. Don't we love Excel? Okay, now let's copy the Rams information. Code it again. There we go. Okay, so for the Rams, we need 6 yards per unit. Okay, 6 yards per unit. So if we are going to be making 205, I'm going to do 6 times the 205, okay, 1,230. And we're going to look up and see how much we have in inventory. Here we have 20 at the beginning, 30 at the end. This is yards. Okay, 20, 30. Okay, so now let's do the magic here. This plus the ending minus the beginning tells us that we're going to have to buy 1,240 yards. And then patches, we also need 1 patch. So we're going to put 205 here. Let's see how many patches we have in beginning and ending. Looks like we have 65 and 30. 65 and so let's see how many we have to buy. 205 plus 30 minus 65, 170. Okay, now we have to adjust now to bring it up to cost. See how much is this costing us? See, the black wool fabric is 13 and the logo patches are 9. So it's a little bit more expensive. Okay, and the patches are 9. Maybe that's what we're selling it for a little bit more. Okay, cost a little bit more to make. So again, 13 and 9. So let's do the math. 1,240 yards times the $13. There we go. Boom. And same here. 170 patches times 9. Okay. This is it for the materials. We have all we need. Now we're going to go down to the next manufacturing cost, which is labor, the labor budget. Let's go back to our setup. That's going to really help us here. We take the blankets that we're going to make, which is the output. In this case, is the blankets. Okay. And we multiply times the input per output, the yards per, in this case, is hours, the hours per blanket. Okay, hours per blanket. That will give us the total hours that we're going to need. And then we multiply times the cost per hour. That will give us the total cost. So we're going to make Broncos, how many? 150. Okay, 150 units. And how many hours does it take to make one blanket? Let's go back up here and it's going to tell us okay, how many manufacturing labor hours it takes. It takes 4 hours to make a blanket. So if I'm going to make 150 blankets and it takes 4 hours, what is the total number of hours I need for production? We need 600 hours. And we know, because we have the pricing here, that we pay $28 an hour to our employees. Now we switch to financial measure, we put a dollar amount, $28. So 600 hours times 28, oh, 16,800. Let's do the same for Rams. So Rams, we're going to be making how many? 205. 205. And let's go back up and see how long it takes to make a blanket. It takes 5 hours. 5 hours. So let's go back down. 5 hours. Okay, so 205 times 5. And then the rate is the same. All employees get paid the same amount of money. So 1,025 times 28. Oh, so we want the total. We also want this total right here. You're going to see we're going to need it in a minute. So 600 plus 1,025. Okay. So total budgeted labor cost, we have to talk to HR and say, well, we need this many employees, this many hours, and this is how much it's going to costing us. So HR can put that in their budget as well. Okay, so it's all connecting with different departments. So we're going to need this money, okay, for the production of the month. Now, next, let's move down to the third manufacturing cost category, which is overhead. Okay, let me just erase this because I want to show you how this is made. Okay. So for overhead, what do we want? We need the rate. We don't have the rate. Okay, we're not being told. The only rate we have is the materials, and we also have the labor, but we do not have the overhead rate. But go down here to the overhead paragraph, we're being told that the budgeted variable manufacturing overhead rate is 17. Okay, so variable overhead rate, 17. We need the total, not just the variable. We need the total. Let's figure out what is the fixed rate. Now, at this point, I want everyone to be thinking, how do we get a rate? I always say this, how do we get a rate? Cost over driver. Cost over driver. So let's figure out what that rate is. Budgeted fixed manufacturing overhead is 14,625. So that's our cost. 14,625. What's the driver again? Labor hours. What do we need? We need the total. We just got it. We got it here. Okay. Total labor hours needed for production, 1,624. A cost over driver will give us the rate that we need, just a fixed rate. Now we have a 9. So we add these two together, and that will be our total overhead rate. Okay, so the 17 is given, the 9 you figure out, and now you know this is 26. Okay. So with that rate, we can put that right here. Okay. It's the same. So these three will be the same. This is the same driver. Same driver. So it's driven by number of labor hours worked, just changing the rate. This is 26. So for every hour of labor, we're incurring $26 in overhead. And if we want the total, eventually we will, when we work a cash budget, when we need the total. There we go. Okay. So now we have the manufacturing budgets. We have the materials, we have the labor, we have the overhead. The next budget that you asked to do is the ending inventory budget, okay, for both materials and finished goods. Since we already did materials right here, we got to do is multiply times the cost per unit. That will be the ending. I really want to focus on ending inventory of the blankets, okay? So ending inventory and finished goods. We're going to do Broncos, we're going to do Rams. For us to figure out what the value of ending inventory is, we need to find out what is the cost per unit. Okay, we already know how many units we have in ending inventory. We have 29 Rams and 24 Broncos blankets. But we need to know what is the cost of each unit. How do we do that? Very simple. We have materials, okay, labor, and overhead. Let's add it all up. What is the total cost of materials in production? Let's copy that from the materials. We have it, right? So it's going to be, we're going up to Broncos now. The Red Bull plus the patches, right? That's the total material cost. Okay, Red Bull plus the patches. Then we have the labor. The labor, go up here. We copy from the labor budget. And then we have the overhead. Copy from the overhead budget. So we have total manufacturing cost of 41,850. Now, how many units are going to be produced? So this is the cost of making, what was it again? 150 units, okay? From the finished goods here, on the Broncos. 150 units. So if my total manufacturing cost for 150 units is that much, then what is my cost per unit? Cost per unit, 279. Okay. So we have 24 units in ending inventory. So the total cost in ending inventory will be cost per unit times the units in ending. Okay. That's total ending inventory. Now we can do the same for Rams. Let's add the material cost for Rams right here in Rams. Okay. So notice how I'm using the usage amount, not the purchases. Okay, very important. This is cost of production, not purchases. Okay. Then the labor, we're going to copy here. And then the overhead budget. And that is going to give us the total manufacturing cost. I'm just going to copy the formula. Wow, it's a lot more expensive, right? We're making more units too. So we're making 205 units. Okay, 205. So what is the cost per unit? Cost, oops, wrong cell. Cost per unit. 357. And how many units we have in ending inventory? We have 29. So 29 times the 357, let's copy the formula. Total inventory cost, okay, ending. Now the cost of goods sold, once you did all this work, the cost of goods sold is the easiest part, okay, because now all you need is the units that you're selling times the cost per unit, which we already have. This is our cost per unit, right? And we also have the 357 for rams. So let's go back to our T's, original T's, and we can use these here. We're selling 140 now. Now you need sales, because this is the cost of the units that you're selling, cost of goods sold. So we're going to step away from production and we're going to focus on selling now 140 and 195. 140, 190. And this simple math will give us the cost of goods sold. 39, 69. Here's the thing. What if I want to ask for one more? I'm going to throw one more in here. What's the gross margin? Or gross profit? Well, for that, actually, I'm going to erase that. For us to get the gross margin, we need the revenues minus the cost of goods sold. Gross margin. It's a valid question I ask. Okay. So the revenues we're going to copy from the revenue budget. Okay. Total revenues for Broncos. And we're going to subtract the cost of goods sold. Revenues minus the cost of goods sold. 3,640, that's our margin. Okay. And we do the same for the rams. So we have, going back up, revenues minus, I don't need to do minus here, cost of goods sold. That will give us 4,095. So we want the total, we can add them. Total gross margin for the company. Okay, so this concludes this problem. I'm going to be posting the spreadsheet. All right, guys.